Welcome in. I'm Casey Gregerson, fund manager for Bighorn Capital Fund. I'm really excited to share this offering with you guys today, which is actually going to be an equity offering, which I'm most excited about because on this offering, you're going to be able to get the same upside, the same opportunities that I've been getting for years in real estate. And you're going to see a common theme today is I want you guys to start to ask your questions. What if you didn't have to choose work and business over family? This is a question I've been asking myself, and I'm going to hit on this several times today, but this is something I really want you guys to key into today. All right, let's get started. So, quick disclaimer like we have to do on all of our funds, our fund is registered through the SEC, and we are a fund for accredited investors. So, if you are not accredited, you're not actually able to invest in this fund. But I still encourage you to listen to this presentation because I want you to see how my business works, how this offering works, and ultimately what my goals and passions are in helping people achieve financial freedom. And I'd still love to do a call with you at the end of this because there are plenty other ways that we could still work together. To start out, I'd love to jump into my journey and how I got to where I'm at today. As you guys can see the logo here, I started work in 2012 for Shell Oil Company. So some of you may have seen this series, and even if those of you who have not, Landman, which is directed by Taylor Sheridan, the same guy who directed Yellowstone, as this is a great depiction of what my life was in oil and gas, right? I came to Houston as an engineer, but quickly I got sent out to West Texas, yet to Midland. This, like when you guys are watching those scenes out, those guys driving on the roads, out on the rig sites, like that was my life for several years. And while Hollywood and like all the, like how they really dramatize the whole series, again, they do it over the top at times. Maybe like the drug cartels are not quite as bad as they make it out to be. But that said, I was on leases where we were not allowed to get out of our truck. And if we passed another car that we did not know and they tried to talk to us, we were told to keep going, don't stop. There were a ton of people who carried pistols around with them. They were like, we were prepared. And it was definitely a little frightening at times. But the point I want to make from this series is show you guys kind of what I lived in the field for a long time. But the main character, so Billy Bob Thornton's character, they hit on this a ton. They talk about like how when you're working in oil and gas, and this could be any industry, like you're sacrificing so much with your family and core memories, and you're out working on a dangerous work site, and you're working just trying to make a career, trying to make something for your family, but you end up missing a lot from your family. Guys, this is exactly where I was at for 7-8 years working in West Texas, working in the oil field, right? I was constantly asking myself, but what if I didn't have to be away from my family all the time? What if I didn't have to be out here in West Texas? What if I could be home every night and being able to control my future and be able to do what's most important to me? That was the catalyst to me really leaning into being an entrepreneur and leaning into real estate specifically. So what that looked like was in about, this was about 2014, 2015. We got in where I first got started in being an entrepreneur was in the franchise world. Me and my wife opened up a Pure Bar franchise in Midland, Texas, of all places. And we ended up, at one point, we owned 6 studios from Houston to Midland, all the way out to San Diego. Right now, though I'm still not involved in this franchise today, it taught me a ton. I learned about how to run a business, how to manage employees, how to be a leader. And the biggest one was sales and marketing. So my background is engineering, right? And for those engineers on this call, this won't shock you, or probably won't shock anyone, but we don't get a whole lot of training on sales and marketing when you're an engineer, right? It's not a skill set I had. But when I opened our first franchise and I became an owner and I had to learn sales and marketing, it was baptism by fire, and I learned a ton about it. And what was really cool is I was able to parlay that into real estate, which was becoming over the years my biggest passion. So let's rewind a little bit. So that first house I mentioned in 2010 that I bought up in Laramie, Wyoming, well, that was my first glimpse into real estate, right? I was a property owner, right? I was a landlord. I had this rental property and it was making a little bit of cash flow each month, and I kept it and I held on to it. And here's the cool thing about oil and gas in my schedule is I had the luxury of working for 2 weeks in the field, but then I had 2 weeks off. And in those 2 weeks, I didn't have any work obligations. So what did I do? I started fixing and flipping houses. I started buying rentals and fixing them up and raising the rents and creating more value and ultimately building up my real estate portfolio, right? But as I was doing this over the years, I started surrounding myself with other high-level investors, and I became part of other masterminds. And one big thing I learned when I got around these other masterminds, these other high level investors, was that I had an incredible niche market in Wyoming. I was sharing with these guys some of our numbers and what we were getting in terms of cash flow and how we were doing on our fix and flips, and just the sheer level of competition in Wyoming. Like, I wasn't competing with a bunch of other investors. Case in point, when it came to wholesaling, when I first started investing in Wyoming, there were no wholesalers, right? Now, I could have just waited for some wholesaler to come around and do it for me, because I was investing in Texas at the time, and there were plenty of wholesalers, and all you had to do was find a wholesaler, get on their list, and they'd send you deals, and you'd vet them, and if it worked out, you'd be ready to go fix and flip a property or buy a rental, right? But in Wyoming, we didn't have that luxury. It was just go look for stuff on the MLS. So rather than wait for somebody to come around and do it, I didn't want to wait, right? I wanted to build out a system to where I could get predictable deal flow. So exactly what I did. I created WyoHouses. This has been about 4 or 5 years ago now that we first started doing marketing, going direct to seller. So remember that Pure Bar experience, that franchise experience I had, I took that sales and marketing and applied it into real estate to find deals. And guys, now this today is one of the most powerful parts of my company, because when I talk to other fund managers, right, and other people raising capital, it's all fundamentally based on deal flow. If you don't have deal flow, you can't raise a fund, or if you do, it could be frightening, because you're going to go and get investors to invest with you. They're going to expect a return. You've got to have deal flow to service and build that return. So by me controlling my deal flow and have the deals coming to me first, now I've got all the deals coming to me through my marketing, through my WyoHouses, and I can decide, okay, is this going to be a fix and flip? Am I just going to turn around and sell this to another investor? Or maybe I'm just going to turn around and list it on the market immediately. Or maybe we're going to take this property, buy it with the fund, fix it up, rent it out, and cash flow it. So that was a really cool way, again, to control my deal flow. Now, the second bottleneck that I faced was managing contractors, right? Anybody who's ever done a home remodel or done any work around the house that you didn't do yourself and you had to hire out, you guys have felt the same pain that I felt, right? And now I was trying to do this at scale across multiple properties. So one of the first things I did, as soon as I had enough fix and flips and rental properties going that I could afford somebody full-time, like one person, that's exactly what I did. I went out and recruited, and I brought somebody in-house to manage my stuff and manage my flips. And then I hired the second guy and the third guy. And today I actually have 4 different crews across my Revive construction teams that are doing all of our work, because this is a game changer. As you can imagine, now these guys work for me and I control their schedule. So this not only gives me predictability on my projects, it helps me control the cost and better estimate the cost. And probably the biggest one is timelines, right? I can get guys when I need to get them, right? And we can move things around on our schedule to where we can get the most urgent task done. Guys, this comes in big time in a market like Wyoming when you're fixing and flipping, and time is money. I mean, time is money in any investment, but especially when you're looking at like seasonality, or you're just when you're fixing and flipping and you want to, for example, in Wyoming, the market slows down typically around August, September, November, obviously, and then into the holiday months, right? It slows down, weather cools off. So does the market, right? So if you're doing a fix and flip in July, like, I've got to get my crew in there, and we've got to fix this thing up fast, because the market, our little window is closing. So I can move contractors around and make sure that they come do our job or do this job first. So that's been a huge, huge game changer for us. Now, the third one is property management. So when I bought that first property back to Laramie, right, 2010, I own that property. I still own that one today, along with 250 other doors. And I'm still managing all those properties today. But do you think it's me managing all the properties? No, definitely not. I've now built a team of virtual assistants. They're actually across the world, from the Philippines to Mexico to even Pakistan. Now they manage all my rental properties. They manage the showings, the marketing, the leasing, even all the way through evictions, right, and collections. They manage all of that for me. And then they coordinate with those same contractors I just told you about. They're the boots on the ground, or often I'll have like a dedicated agent in each city that can go check on something. But those virtual assistants have allowed me to scale and continue to take on more properties and keep property management in-house. And it's honestly one of the most proud things I've built in the company, because now, rather than me having to go work with a third-party property management company that I can't really control over, now I've got it in-house. And if we have a vacancy we need to fill right away, or we need to go get a repair done, or I got a property that's been sitting and we need to fill it, like we can prioritize it and I can get down to it, or I can adjust price, adjust marketing. Like I can turn all the dials on my property management company, just like I could turn the dials on construction and also on our deal flow. So it took me about 6 to 7 years to build out this vertically integrated company. And while doing that, I love building companies. You guys can see the passion. But what I really found out about myself is what I really loved was helping other people, right? Helping other people achieve financial freedom like I had done it. And I've really seen this over the last couple of years. And for example, I lead a weekly Zoom call every Friday. Sometimes we do 2 hours. Sometimes we go for 4. We've gone 4 hours straight before, where I have new students, new people come into real estate that want to do deals, right? These are hustlers, people that want to go, they want to get into the game, right? They come in, they bring deals to me that where they're stuck on, and I help them get it closed. So check this out. My goal, as you can see down here, is to do 100 deals in 2025. Now, to do these 100 deals, we're going to take 50 of them over here from WyoHouses, my direct-to-seller company, right? Now, the other 50 we're anticipating will come from students bringing me deals where they need help, right? And I'm just part of some other investor communities and become a leader. So now they're bringing me deals. So I'm really excited to go accomplish those goals through other people, help them do another deal, help me and my investors continue amping up our deal flow. It's a really cool kind of harmonious system we've created. So that's the first group of people I love helping. The second group is probably more people like you guys that are listening to this today, right? You guys are, maybe you're working a W-2 job and doing really well, right? Or maybe you have your own business, right? Or maybe you just exited a business, right? That's always a great place to be, right? You built it up and now you exit it. Now you got some capital to go invest, all right? Other people might be just have some money in a self-directed IRA that they want to get a better return on. And maybe they just been putting money in the stock market and they're like, you know what? I'm tired of the volatility of the stock market. I've always wanted to get into real estate, right? So I love helping those people because then they can help them do what I did, right? And build and create passive income. But I've realized over talking to many of my investors over the years and working with the countless people who have came and invested with me, that these people, they don't want to go find deals. They don't want to cold call. They don't want to spend what I do in marketing. I spend $40,000 a month often to get deal flow, right? To get these deals coming in the door, right? Most people don't want to make that investment. They also don't want to manage contractors, right? We talked about that earlier, all the headaches that come with that, right? Who wants to manage contractors, right? Other than us, but we've built out a system and a team to do it. And the third one is property management. And that one I get, right? I understand. When I was doing it, I was the same, right? I didn't love the calls in the middle of the night and tenants calling and always issues, right? Always issues at the most inopportune times, right? But that's why I built out a system and a scalable company and a scalable team to where we could do property management in-house. So realizing that most people didn't want to do all three of those things, and honestly, most funds and most syndications, they outsource the GC. They outsource the property management company. They sometimes might even outsource the wholesaler and the deal flow, right? Maybe they're just managing it all, managing all three of those people, right? I'm the fund manager, and then I have all three of those things in-house. And that's why I'm so excited to help other people, is because I can give them that same opportunity that I have, right? Because most people don't want to build out a vertically integrated company, right? They're not a serial entrepreneur like me, but they still want to have the same benefits of it. And that's why I'm super excited to go deeper with you guys today and show you what we're doing and give you guys an opportunity to come invest right alongside me. I did want to share a quick picture of our team. This is all my construction crew guys from last summer. And I'm going to dive a little bit deeper if we have time in the Q&A later and share you guys a little bit about our company structure. But let's go a little bit deeper now on helping more people. Because again, this is my passion. I'm going to keep coming back to this, guys. So I didn't want to just say I want to help people. I wanted to set a number and set a goal for myself personally. So I made it my mission and my goal to help 100 families achieve their financial freedom, right? So what does that look like? That is actually like we're doing workshops this next upcoming year where we're going to bring people in and we're actually going to give them the blueprint, right? But the reason I'm bringing this up, guys, is I want, again, back to the question, right? We're going to ask ourselves the question. I want you to ask it to yourself once again. What if you didn't have to choose business and work over your family? All right, think about that for a second. And let me maybe share a story to help drive it home. Again, I asked myself that question when I was out in West Texas, away from my family for 2 weeks on and 2 weeks off. And then I asked it again 2 years ago before I finally left my W-2 job. And I had a guys, it was a great gig I had before I left 2 years ago. I worked for 21 days in the office, which is only about 5 minutes from my house here. And I would go to work for 12 hours at 2 p.m., right? And then I would get off at 2 a.m. I'd come home and I'd be able to be home every day. And then when on the 21 days off, I didn't have any job responsibility, right? I had the best of both worlds, right? It was like a field schedule, but I was at home and working out of Houston, right? But here's the thing. As I mentioned, I would come in at 2 p.m. and then I would get home at 2 a.m. So when do you think I saw my kids? Well, I really didn't see them for 21 days, right? Because they got out of school at 3. I was already at work. By the time I got home at 2 a.m., they're asleep, and then I'm sleeping in to get some sort of sleep. I'm not waking up at 7 o'clock after I got home at 3 or went to bed at 3, right? So I completely was missing them. And I was missing that time with them. But the biggest thing that was really pulling at me, and some of you guys who have kids and love being a part of their sports, is I was having to miss all their games. And if you guys follow me or see what I post on social media or what I'm all about, like I love coaching my kids and and helping other kids. And I didn't have that opportunity. And I'll never forget the moment, guys. I'll never forget the conversation with my wife when I was after, you know what? I think it was after a game I was able to be there for my son, and I was there to coach him and I loved it. But then the next week I was going to be gone because I had to go back to work and I was going to miss his games. And I told my wife, I'm like, Annie, I'm not going to do it anymore. It's not worth it. I'm not going to sit on my deathbed, hopefully many years from now, and say, I'm glad that I kept that W-2 job that much longer so I could, in order to miss all those games, right? I want to be on my deathbed and be like, you know what? I made the choice to leave my W-2 job so I could be there for my kids. I could coach them. I could be there for these important moments, right? But guys, I had that ability because I had been asking myself the question for years, but what if, right? And I had been taking action, and I created financial freedom through real estate and built an integrated company to where I could make that choice. So guys, I share that with you because I want to give you guys the same thing. And now you could probably see where this passion comes from. People, give them that same opportunity through real estate, right? So I know I went deep on that, but I really wanted to drive that home. So now with that, guys, let's dive in to some case studies. Before I do that, big recommendation I would recommend for anybody who's thinking about investing in real estate, whether you're brand new or one of the super advanced, sophisticated, and experienced, right? Whatever level you're at, you need to do your due diligence, right? You need to understand track record. You need to look at deals, and whoever you're working with needs to be transparent on that. And what we made a decision several years ago when I first started my fund was we were going to provide this to our investors so they didn't have to go tracking all these documents down, waiting on us. Like we're like, let's just build it out and give it to them. And that's exactly what this is. There's a QR code here that's going to take you to this spreadsheet, and I'll come back to it. Actually, it's still up there so you can see it. So this is our track record. I've got over 125 transactions here that majority of them I've done with other partners or lenders, right? People just like you guys that lended me 50K, 100K, 150, who knows? It's all in the spreadsheet, right? And I've included settlement statements from the title companies. I've included photos at times, what we bought the property for, what we sold it for, like as much detail as I can. So you guys can go through and do your own due diligence and see some of the deals we've done. My investors, of all the things we provide, I think this is their favorite because, again, they can go in, they have what they need, and they can ultimately conduct their own due diligence. Now let's talk about some of the wins, right? I like to give sports analogies, right? Everybody remembers growing up, the big wins you had, whether football, soccer, whatever sport you're in, volleyball. You remember those big wins you had, right? And I want to share a couple big wins that we've had over the last couple of years as part of our track record. And the cool thing about these wins is these are wins, and these are literally examples that we're now going to do on this next offering that I'm going to share with you guys. So pay close attention to hear what we did on these deals because we're going to do the same thing. And the cool thing is we can do it together. So this first one is Hillside Casper. This was with a partner a couple years ago, right? So this partner was maybe similar to you guys. He was working in oil and gas, doing really well, but he had never invested in real estate. He had he really didn't have any real estate exposure, but he knew I'd been in the business and he knew I was looking for partners, capital partners. So we created this really cool partnership. And what we did, before I get to this big one, the first one we did is we just moved in some of my existing assets that I own that were cash flowing, and we moved them into a joint LLC. And then we just started to hold them, right? It was a cool win-win. In addition to that, we also started bringing in some little fix and flips. So we'd go buy a property, fix it up, and then if we could sell it and realize that capital, like that cash out right away, we would do that. But on some of them, we'd be like, you know what? This one cash flows, or maybe interest rates went up, right? We're like, you know what? It's not worth selling this one. Let's keep it, right? But we were continuing to build our own little portfolio together, right? But then so this was a bunch of singles, right? But then here's the home run. So we had an opportunity to go take down a 66 unit in Casper, Wyoming. This is one of my most favorite projects we've done. We started it about 2 years ago, and you guys can go see it today. It's been exciting. We actually just in the last couple of months finished getting it completely remodeled, 100% occupied. And guys, it's like literally, we have like one room. Actually, none of our rooms are open right now. We just have a couple of short-term units that we furnished that we're working on that. We're actually having to pull some of those offline because there's so much demand for people to come rent it, right? And this is going to be a common theme I talk about with our Wyoming assets is there's so much rental demand and there's not enough supply, right? A lot of that's because of contractors, and a lot of it's just because of the growth that Wyoming is experiencing and the affordability that it still has, okay? So let's break down these numbers for all you nerd Excel spreadsheet guys like me, okay? So we bought this one for $3.2 million. We put about $825,000 into the property, all right? So we renovated 55 units total, right? This is a big renovation, right? So the average cost per unit was about $15K, all right? So if you add this all together, and what I want to show you guys is what it's now worth, right? We actually had one of our units a year ago appraised for $90,000. All right. Now, if you multiply 90,000 times all the units, that's what we give this nearly $6 million as the current value. Okay. But here's the kicker. This appraisal came in a year ago when we had not, the building looked like this. Now we've cleaned it up. It's renovated. The inside common areas are updated. Like it appraised for 90,000 as it in the middle of our rehab. So we're excited to see that number potentially go up. But regardless, this is the amount of value. Check this out. Like this will blow your minds. We created nearly $2 million of value in about 18 to 24 months, right? This is what I mean about a home run. This was a really cool multifamily deals. And this is why I'm excited to scale and continue to do more deals, right? It's all about building blocks, right? As I showed you guys, I started out doing a bunch of fix and flips, a bunch of rentals, like single family, duplexes, fourplexes, moved up into 14 units, right? Again, I'm stacking these little blocks, building it up, right? But while I'm stacking it, I've been working with private money lenders, other partners, right? Then I take down this one with a big partner, right? The next big one was this 45 unit in Evanston, Wyoming, right? So check this one out. We bought this one last June, right? And I want to tell you a little bit about how we found the deal, because I think it's important for you guys to know that, because some people often ask, they're like, why would somebody sell a property that much of a discount? Like, that doesn't make sense to me, Casey. Well, it'll make more sense here. So this property was in Evanston, Wyoming, a relatively small town, but in a great area, which again, I don't know if she realized what she was sitting on, because it's 60 miles from Park City, right? Ton of people, 80 miles from Salt Lake, right? All these people are just commuting from Wyoming right now just because it's so much cheaper in Wyoming, right? And there's a big power plant that's being converted to nuclear. That's actually a project done by Bill Gates that's going on not far outside of this town. So all these jobs are coming in. There's all this demand, right? But what this lady couldn't solve was the construction, right? Of these 45 units I bought, over half of them were vacant, right? And over half of them were like, they needed a bunch of work, right? I'm telling you, if you guys have seen my social media, you've seen me post like the shape that these rentals were in, right? And this lady couldn't find contractors, right? Everybody's busy, and she didn't have a contracting team. So I told her, I'm like, you know what, Mrs. Seller, I can get you capital. I've got the contractors to go do this deal. You just got to give me the terms, right? So what I negotiated was she actually funded 95% of the deal at 5% interest-only payments, right? So that allowed me to bring in my limited partners through Bighorn Capital Fund, and they funded the remainder of the down payment and the rehab in second position, right? But we bought this at such a discount that it's going to be a great deal where it's already going really well. We're already filling units. Another thing I wanted to mention, guys, is when we underwrite deals, which I'm going to show you underwriting a little bit later, but when I underwrite a deal, I like to have a low case, a medium, and a high case, right? Because you never know where rents are going to be. But I've just been seeing rents trend up in the last couple of years, and the current market might be the medium case, right? And low market is just we're trying to account for like things dropping. But the high case is where I think things are going, guys. That one I just showed you in Casper, and now this one, more times than not, we're either hitting the high case or we're between the medium and the high case. And the reason is we're still continuing to see this growth in Wyoming, and we're making these bets just like this one where we knew it was going to grow, right? We're making these small little bets And when I say bet, we're making a bet that we're going to hit the home run on the upside. So this one has been going great. We're already filling units in our high case. So really excited about this one. And so are all of our investors. I'm expecting to have several investors from this deal investing in our equity fund today that you guys are looking at. All right, we ready to get into the current offering, which you guys have been waiting for, okay? So I'm going to share the high level look at this. Then I'm going to go into the underwriting briefly. And then lastly, I'm going to show you the distributions and how the waterfall works. Okay, and now I understand a lot of you might not be used to investing in funds or syndications with limited partners and general partners. So I'm going to be careful not to use too much jargon and explain this carefully. But also, if there's something that you don't understand, that's okay. Guys, I'll be honest with you. Again, I'm an engineer. I knew numbers, but when it came to syndications and waterfalls and preferred returns, I was like, holy cow, this is a lot. So if you want to hop on a call and explain this deeper, I'm more than happy to do so. Okay. So let's start with the first piece of jargon right there on top, projected IRR. IRR is the internal rate of return. To easily explain that, the best way is to think about the stock market, right? A lot of people might say the stock market, they've been making 10% year over year, right? So this is a year over year number. So you look at your full project, right? How much did you make, right? Because this number down here, the cash on cash return, that's how much cash flow we're expecting from the property. Okay, so that's after all expenses are paid, based on all the rents and all the income coming in. How much distributable cash flow do we have each quarter, right? Because we distribute it quarterly, as you see here, right? So we're gonna distribute it quarterly, and there's gonna be some cash flow, right? But also, when we go to sell this thing at the end of the hold, which we're projecting 5 years, again, my second bullet point, at the end of that, there's gonna be a big sum of money that comes in, right? So we might only hit 8 to 10 or 12%, 14 over the next several years. But at the end, there's this big lumpy payday, right? They compare investing in real estate could be lumpy, right? Little chunks, little chunk. At the end, big chunk, right? So to extrapolate that over 5 years and look at what would my return have been year over year, that's why they have IRR. So easy math. If you invested $100,000, you could expect that over the 5 years of the investment, you would make $21,000 a year. Again, these are projections, no guarantees, but wanted to kind of illustrate that. The other thing about my hold is we're projecting to hold 5 years. Could we sell sooner? Absolutely, if it makes sense, right? Or could we hold it longer? If in 5 years we're at a spot where the interest rates are sky high and properties aren't moving, then we'll wait. We'll wait to when it makes sense to sell, okay? The other part here is minimum investment, $50,000, and we're targeting to raise initially $5 million for this first raise, okay? Let's dive now into the underwriting. So on all of our deals, what we like to share is a detailed breakdown. Like I go through and actually record my screen. I dive into the spreadsheet, which I'm going to share the link with you guys to the video and also the spreadsheet so you could dig in, right? I'll make a copy so you don't mess up my spreadsheet, right? But that way you can play around with the math guys that really want to dive in, okay? Because again, feedback from working with many investors over the years has been like, you know what, Casey, I love that you break it down and I understand what's going on. What are the numbers? What are the assumptions, right? If you're looking in here, like you can see that I'm assuming a 3% growth rate per year in rent. I'm also, you can't see it in the screenshot, but in the spreadsheet, you'll see I'm projecting 3% appreciation, which honestly, in a lot of our markets, we're seeing 5 to 10%, but I want to be conservative. You're also going to see what are the current market rents? What is a mortgage payment? What are all the expenses, right? How do we come up with all these numbers? Okay, you're going to be able to see that all in this underwriting breakdown. And I didn't want to go into the spreadsheet today, but that is something that we will share with you guys. And if you want to dive into that, I highly encourage you to go look at it. Because again, you want to understand the assumptions and the risk with any investment you're making. Okay. Cool thing I do want to highlight on this though, if you see 2510 Rimrock here, you guys have maybe seen this in my social media. This is a sober living house. We're really excited about this one in Billings, Montana, because it really embodies our company mission, which is creating value and improving communities, right? Here we creating a ton of value for our investors, right? And we're improving the community there's like in Billings, it's rapidly growing and they definitely have more than enough alcohol and drug issues, right? So we're helping these people rebound. And yeah, it's just a really cool thing we're doing. So I wanted to share that. And it's also, we're expecting to be cash flowing really well. So I wanted to note that that's actually part of this fund. So people who have seen that, I know that'll excite them of what you're being able to invest in. Okay. Because in addition to that, there's going to be other assets that we look to build upon that, right? This is our very first one, and we're planning to add more of them in Billings, potentially other markets. The other thing we're looking at is co-living. In addition to sober living, we're going to do co-living, right? This is just, again, another mitigator of risk, right? Because if we're looking at like, well, what if, because this, I'm not as worried about this in Wyoming, but I'm definitely worried about this in markets like Texas and Houston and for sure in California and New York. Like, how are these people going to afford the rents, right? Jobs are not keeping up. So what we're planning to do is make sure we have affordable housing to where we can actually rent our houses by the room. So for example, we have a house that's renting for $2,000 a month with a family, right? Well, let's say in 6 to 12 months, this could be a risk. Well, all right, this family lost their job and there's no one can afford 2,000 a month. Well, there more than likely will be 4 people that can afford a bedroom for $500 a month, because these people still got to live somewhere, right? And I just think in the markets we invest in that you really don't see pullbacks in rent. And that's just if you look at that average over time. Okay. But I'm getting in the weeds here. I just wanted to share a little bit about how we mitigate risk because it's super, super important. Now let's talk about the waterfall here. Okay. And again, this will be broken down what this looks like further in the underwriting video, but I wanted to give you the high level. Okay. Right. Just like most other funds, we have a 2% management fee, right? But then we're doing a 8 to 14% pref, right? The reason why it's a big range, I'm going to get to in just a second. That's based on how much you invest and if you're part of the first 2.5 million, right? But to simplify this, for some of you who don't know what a preferred return is, that means that of the cash flow after the management fee is paid, obviously we've got to pay ourselves and our people, but after that is taken care of, then the first, let's say that you're our class A, you invest 250,000, you come in for the first 2.5 million. The first 14% of the cash generated is all coming to you, right? Me as the general partner, I don't get any of that, right? You get 100%, right? But once I get you to 14%, then we split 80-20. So in this example, from 14% to 22%, you would get 80% of that cash flow. I get 20, right? So I'm just getting a little piece, right? But then I set this up to where if I deliver a 22% to the fund, I start to be able to, as a general partner, I then get to participate 50-50. So after 22%, then that's when I really start to make more money on this deal. And I set that up intentionally, right? I wanted to make sure that if I performed, I would have plenty of upside, and that I wanted to make sure the investors were getting paid first. Now back down to this table. This just shows you based on how much investment you make and when you come in. I wanted to incentivize higher investment amounts and also people to come in early. But again, if you only have $50,000, you would be at an 8% base. But if you bring it in and you're part of the first 2.5 million, then you get a 10% preferred return, right? So don't wait, jump on this. I will say this, guys, we had an investment last year, at the end of last year, and a lot of you guys probably maybe saw this one and didn't get in on it because we had an opportunity where I was actually doing the same thing where I was bringing in some properties, right, that I currently owned. I was doing some fix and flips. And the other big part was I was offering depreciation, which I actually want to show you guys that on a slide, right? This is an example from that deal. Okay. So the partners that I had, they were, and this goes for a lot of high level investors. Sometimes they're not as worried about the IRRs and the cash on cash returns, right? They want a stable asset, but they're more interested in what are the tax depreciation? What does it look like, right? What are the tax benefits? Because the cool things with this, my last group that I did this deal on, and the reason why they jumped in on this and we closed by the end of last year is we're actually in the middle of a cost segregation right now where we're going to do, it's called a cost segregation, right? Which is going to break apart all the parts of the property. That way we can do bonus depreciation. That allows us to write off more of the property in year one. So actually we bought this at the end of last year. My investors are going to get write-offs in 2024, right? It's really cool. So in that same fashion, this year, people who invest in this fund, we're going to be bringing in new assets, right? And we can depreciate those and we can do cost segregations, right? And give our investors the same cool benefits of bonus depreciation, right? Now, this is definitely not the simplest thing to understand. And I would recommend you talk to your CPA to know exactly how much you can plan to write off. But just to give you, this is just based on this last deal, right? On my last deal, if somebody were to invest $100,000, they could expect a $55,000 write-off that year, right? In year one. So literally, if they had $55,000 of income, well, at least this is how it works for me, right? Because I'm an active investor. If I make $55,000 from a flip and then I put in $100K into my fund, I'm able to wipe out. That's a wash, right? Because I take a write-off of $55,000 and then I made $55,000. Okay. Now, again, this applies differently based on your tax treatment. So please consult a CPA. But I definitely wanted to highlight a big, big, big benefit of investing in an equity fund like this is the depreciation benefits. Last couple things before I get into questions, guys. I wanted to talk about what are the exit strategies? Because if I've learned anything over the years, you guys have heard me say it, always have multiple exits. Okay. Exit option one would be we just sell these properties as one-offs, right? Because there's going to be some single family, some multifamily, right? Some of these co-living, right? Different types of assets. We could sell them off individually, or I could sell them off to our cultivated buyers list, right? That's option one, right? And that's probably the one most people would think of. The other option is we could refinance it in 5 years, right? And then the people who want to stay in, right? And maybe they've been getting the write-offs and they don't want to cash it all in and pay taxes. We could cash it all out, or we could go to the bank, refinance, cash it out, pay off anybody who wants out, and keep it going, right? Option three is we could just go sell it to another big fund like us, or another big syndication that's using institutional capital that might just want to buy our deal just purely based on the cash flow. Next steps. All right, let's talk about this, guys. All right, guys, let's talk about next steps after this. So I want to encourage you guys to review all the offering materials. Whether you guys want to review it by yourself, or if you want to get on a call with my team, we're happy to guide you through it. For example, one of the things I'll share with you guys is this webinar, right? This video, it's about 30 to 50 minutes. It goes through a lot deeper dive on some stuff we didn't cover today, right? And it talks a lot about more of like I went pretty deep on our operations today and more of like why I do what I do. But this goes into like how we mitigate risk, how we do our own due diligence, right? How do we underwrite deals? What are some of the risks and how do we mitigate them, right? That's a really important one. The other thing this presentation shares is a little bit more about investing in alternative investments. Because for some of you, this might be the first time you've invested outside of the stock market, or maybe first time period, right? And maybe real estate, it seems abstract to you, or just in general, alternative investment seems new to you. I dive deep into like how the ultra wealthy invest and how they have real estate it's almost any wealthy person. Some people it's the majority, but any person that's really trying to build their wealth, they've got at least some piece of real estate. And this presentation shows you a little bit more about that. But in addition to that, guys, we're going to share a lot of different materials with you, right? But again, I mentioned this earlier. I want you guys to book a call with me, right? If you do anything, there's a link right here. Book a call and let's hop on a call and let's understand, what questions you have, right? Because if you didn't get to ask them today, I want to give you a chance to ask them, right? Because everybody's a little bit different. They got different investment amounts. They have different questions. And I want to get on that call and ultimately understand what your goals are, right? Because as mentioned, my end goal is, again, I love my fun. I love fixing and flipping. I love all that, but I want to help 100 people achieve their passive income goal, right? So let's do that call and let's understand that goal and see if investing in the fund helps, or if not, maybe there's other opportunities. Maybe you're not accredited and we could talk about how you can invest in buying turnkey properties or becoming a private money lender on deals, right? Lots of different opportunities. Okay. But once we have that call, the next step is we get you into our investor portal, which our investors love. It's really easy friendly. They can do all their administration, all that stuff's through there. You'll actually sign all your documents through the portal, which is really cool. At that point later on, once we're ready to go, you'll be wiring funds, and then you're well on your way to reaping the benefits of real estate. Now, as we wrap up and move into Q&A, for one final time, I want you to ask yourself this question, because so many of the people who've invested with us have asked this same question, and the answer has been a resounding yes, and they've been taking the steps to creating financial freedom. Again, ask yourself this, but what if I could choose family before work and business, right? Because I know what the answer is for you guys, but I want you to be able to have the power and the financial freedom to make that choice. With that, I'll open it up to questions. Okay, great question about our company structure. I've actually got this one quite often about, hey, well, do you do all this, Casey? How do you manage all this? Like, this is a lot for one guy. Let me just show you a little of our org chart. You can see us right here. I am the CEO and visionary of our companies. I have my COO, Clint, right here. And then we also have this is my sales team, right? So I have Judith Allen she's moving into this role as we speak of the sales director, right? And then here's my property management team over here, right? With our virtual assistants, right? And then here's construction, right? Here's several of our team leads. This is not completely up to date because we've added a couple more people and looking for more. And down here, this is our marketing team, right? And Dallin is the leader of that team. And you can kind of see a little bit. You can see Alyssa here. A lot of you guys have probably met Alyssa by now. She is my head of investor relations. And you guys also might meet Ashley. Ashley is also my executive assistant, and she helps us with dispositions. Okay, another great question around strategy with single and multifamily. You guys are right. I did not dive totally deep on this today because you're going to see it in the underwriting video, but let me explain that right now. So what we're currently targeting is a mix of single family, small multifamily, and large multifamily. These are actual properties that we've already identified to purchase. A lot of these are actually I already own. And then some of them, like this Wheatland 29 unit, is going to be a bigger acquisition. Because again, I wanted to set this up similar to the last couple funds where I had some kind of flagship big multifamilies. We had some single families that were like, those are always good because they're very liquid, right? You could sell single families and move those pretty quick, right? And then also introducing in some flips. So, right, when you guys see the multifamily, you'll see I've got flips worked into here. We've got the large multifamily. I mentioned that sober living earlier, which is another cool one. And yeah, it's going to be a mix of both. And I like the diversity of it, right? Some funds only target multifamily and some only single family. And I could see value in both of those, but I wanted to create a more diversified fund. And as I mentioned earlier, being able to fix and flip can create a lot more income for the fund. But if we do it inside of a fund that's also designed to hold for 5 years, it just mitigates a ton of risk and allows us to go, honestly, allows us to go take some big swings on single family. Because I think it's an incredible, I didn't mention this, guys, and this gets me going probably more than anything, and should you as well. With the new administration and potentially drilling coming back and oil and gas being more well supported over the next 4 years, as in Wyoming, oil and gas, and just could go across the country, right? Oil and gas is not, there hasn't been as much drilling over the last 4 years. That's for sure, right? But Wyoming, like when oil and gas is going, holy cow, it's gangbusters. But in the last 4 years, it's been depressed, but yet Wyoming is stabilized and still continue to grow, right? Like that, the examples and case studies I've showed you, this has been without the benefit of like oil and gas booming, right? So, but I think there's a good chance it could boom again because everything Trump's been saying about like, hey, we're going to drill again and we're going to become even more stronger as a country and energy dependent. If they turn on all the oil drilling again, holy cow! Like a lot of these areas we invest in could potentially blow up. So I think right now what I'm seeing in the market is there's still a lot of properties sitting, right? It's still soft because they just haven't dropped interest rates quite enough yet. So while things are still stable, it's a good buying time, right? So I'm actually really bullish on buying a lot of properties for the fund that we will partner on. And if by the time we fix these up and sell them and list them this summer, there's a chance they could go up significantly. Or maybe we wait till the following summer, right? But let's say that doesn't work because we have a fund, and let's say that we don't end up selling them for a home run. Well, maybe we can sell them for a double or a triple. That's still great. Or we keep them as a single and we just keep making cash flow from them each month. So I think that's exactly why. And for you guys to understand like my logic and my strategy on this fund, that is the best example. And one more thing I'll share, guys, is the reason I'm doing this is because could I go do all this? Go fix and flip. I've been doing it for years. I could buy rentals. I could even go buy small multifamily, but I can't do it at scale without partners just like you guys to help us take down bigger deals, right? By bringing you guys in, now we can go have even more opportunities to capitalize on this market. And I'm really bullish about it. You guys hear me talk about Wyoming a lot. And again, this isn't just going to be limited to Wyoming. It's the surrounding states. You can see a deal here in Billings, right? We look at stuff in South Dakota, Nebraska, even other markets if the numbers make sense. We're going to do deals where it makes sense. But again, the anchor is always going to be Wyoming because it's always been my bread and butter.